Light on what the global cues are looking like and where the world is headed. Peter Cardillo on the show with us. Peter, hi, good morning. Good to have you on the show. Guess it really seems to be a US versus China story that's playing out, and what's going to come out of those negotiations for whenever they start. But till then, the equity markets seem to be holding out quite steady. What do you think is fueling this move?
Yeah, I think we may have found a temporary bottom here. And the reason why I say that is because earnings are beginning to show that for the most part, they have beaten market expectations. Of course, guidance has basically been pulled back, and there's a lot of uncertainties, and that's all due to the trade war. And so I think for now, the market has found a bottom. And we saw that with the Alphabet earnings, where the market really was taken by surprise. And there have been other companies as well. And so I think it's safe to say that for now, investors are likely to focus on the big name companies that will be pouring in next week. And I think that we can probably rise in terms of the indices, maybe another 1.5% to 2% from present levels. And also, I think we're beginning to see maybe some movement between trade negotiations. And of course, the key remains China. But I'm pretty sure that with the Trump administration already showing signs of beginning to backtrack on some of their demands, that we'll probably get a deal, at least an initial deal. And that should basically, diminish the fear factor regarding tariffs.
Peter, good to be speaking with you, but help us understand that given the fact that just yesterday we have seen all these tech majors rebounding sharply, and still if we see the index that is still down almost 14% from its highs, do you believe that the rally will be led by the tech counters, and is that the space to watch out for?
Well, I think, there is if inflation, by the way, will get a glimpse of the PCE this coming week, and we'll also get a glimpse of GDP. And speaking about GDP, I'm looking for a growth of around 0.6%, a pretty big, a pretty big contrast compared to Q4 of 2024. And so that would imply that we probably either are moving into a short-term light recession, or perhaps we are already in one. But I think the key, obviously, will be with the inflation numbers. And we'll get a glimpse of the PCE, which I expect it to be lower. And if there is some sort of an agreement between China and some of the key trading partners with the United States, then I think there's a good chance that the Fed will likely lower rates in June.
Right. Very good morning to you, Peter. This is Cheryl also joining in the conversation. Given the fact, the way how the global scenario is now shifting and day in and day out with the commentaries that you're getting in, one day it's a positive one, the other one you have a backtracking of these comments. But how should one actually play the theme? Do you think that now EMs is the place to be in? And amongst EM, by when do you think you will have an FI liking India versus China?
Well, I think if I heard correctly the question, I think that India will make a deal with the United States, and I believe that, as I said before, there'll be some sort of a deal with China as well. Now, of course, the backtracking changes from one day to another, but in essence, it's the markets that continue to dictate to Washington and to the other countries that that the trade war must be avoided and deals must be made. So I think India will probably be one of the first countries to make a deal. And that should alleviate the fear that perhaps India is going to look at China as opposed to the United States.
Yeah, absolutely. Peter, so good having you on the show today. Thanks for your time.
If you like this video, then like, share and subscribe to ET Now.